5 financial lessons we should learn from COVID-19. The COVID-19 pandemic has had unprecedented impacts on everyone's lives. We are seeing an extended period of economic and social uncertainty, and disruption lies ahead. Despite the government's economic support package, many people are losing their jobs and struggling financially. Managing your money is more than just knowing how much you have in your bank account. It means watching what you spend, and saving what you're able to. In today's world, where every transaction can be automated, and you're just one click away from purchasing anything on the internet, sometimes it's too easy to get caught up in spending and oblivious to keeping track of your money movement. As the result, financial management is trickier than ever before. That's why financial literacy is vitally important. It equips us with the knowledge and skills we need to manage money effectively. Here are 5 essential lessons you should learn from this pandemic to manage your money effectively and increase your financial intelligence. 1. Have a financial plan. Managing your money is like controlling what you eat. It requires commitment, determination, and discipline. Have you ever thought to yourself, this will be my last chocolate cake? I'll start my diet from tomorrow, and you never did? It's a bit like during a time of economic growth. You think that because you are paying your bills, with a little to spare each month you're good. But it's not enough. Especially when hit with a blow, like a pandemic. You need a plan to constantly improve your financial position, so that you are prepped to navigate through any challenges ahead. As the saying goes, failing to plan is planning to fail. You need to set a financial goal now and work towards it. It's not a thought you save for later. Write down your goals and back them up with a plan. Having it written down means you can reference it, measure it, and manage it to keep track of your progress. 2. Emergency fund is crucial. COVID-19 has become a typical case study on having an adequate emergency fund. Building an emergency fund and managing your risk is a foundation of a financial plan. An emergency fund is the money you set aside to cover urgent or unexpected costs, like job loss, pay cut, or major illness. It is your safety net, so you do not need to borrow money if something happens to you or your family, exposing you to more risk. As a rule of thumb, you should aim for an emergency fund of at least 3 to 6 months worth of your living expenses. This includes things like rent or mortgage, bills, debt payments, school fees, health insurance premiums, and everyday spending. Remember, this is a long-term goal, never an overnight achievement. So, depending on your circumstances, prepare yourself to hit your target within 3 to 5 years. 3. Manage your debt. During good times, it's easy to see debt with low interest rate as a great enabler to build wealth and get what you want. However, owing money or falling behind repayments can be stressful. Relying too much on credit cards will put you in a vulnerable position too. While not all debt is bad, the lesson from the pandemic is to keep it light. Light on risk and light on your financial position. So this really depends on our risk profile. The lighter the financial load you must carry, the easier it is to survive, as you need not worry about making loan payments when you're trying to keep your family safe and healthy. The bank's response to provide assistance to borrowers has been impressive. However, we should not wait until we are impacted by a crisis to pay attention to our debts. By continually reviewing our loans, terms and interest rates, you can achieve great long-term savings. 4. Diversify your income. More income streams equal more security. Those who solely rely on one source of income are more vulnerable to economic downturn. With multiple streams of income, you can avoid putting all your eggs in one basket and use several streams of cash to grow rich. When considering long-term goals for their finances, most people will include a strategy to grow their wealth over time, with the aim to eventually fund an early retirement, additional spending on luxuries, or other discretionary goals. For most people, this is a 10+ year time frame, and takes the form of investing in shares or property. However, during uncertain times, having a long-term nest egg can provide a layer of financial confidence. Consider the ability to build a nest egg over an extended time frame that can provide passive income to you in times of need. This may be in the form of a property that can deliver a positive cash flow return, or a share portfolio that can deliver dividends. Although obtaining this may seem out of reach for most people, it can be achieved over an extended time frame, with some financial discipline and a clear strategy. 5. Create a long-term vision. If there's anything that COVID-19 has made us realize, it's nothing is certain. Financial upheavals are a normal part of life. That's why you need to develop a long-term vision to build a financial stability. When nothing is sure, everything is possible, said Margaret Drapple. There's nothing like a crisis to turn conventional wisdom on its head. When things are going well, it's so easy to get caught up in the busyness. For the day we neglect to take time to think and do what could bring true wealth to our lives. If you found yourself financially underprepared for the coronavirus, isolation is a perfect opportunity to take a break from a busy schedule, to sit back and reflect on life and career or business choices. The long term begins now. We need to look through the short-term uncertainty and think about the post-COVID world to build foundations of stronger and more sustainable future. Many people have been forced to consider how to spend every dollar in their bank accounts and stop the leisure activities we all love, like traveling on holidays, going to the movies, and so on. It's clear that we can all survive without spending and doing as much. I'm not saying paying for entertainment is bad, but the lessons learned from COVID-19 are to have a reasonable spending plan on non-essential things, so you can save money and be better off eventually. Being thrifty is a good habit that we've been forced into because of the shutdowns. So, keep your financial focus on your long-term goals when deciding. Finally, be flexible with your financial plan as well, because learning how to manage your finances to build wealth is a process, not a goal you set and forget. Be prepared for long-term and consistent learning. Regularly review, reevaluate your financial plan, and adjust it as necessary. The financial lessons learned from the ongoing crisis could make the next downturn a little less painful. By improving your financial literacy, you begin to better position yourself to care for your family and prepare for times of financial stress that lie ahead. Like and subscribe, and let's learn and grow rich together.